Let's quickly check in on your thoughts on Basel III, the fact that the announcement is potentially not as onerous as the market was expecting, banks across the board rallying. We are looking at capital requirements increasing to 7% of total risk yielding assets, but the catch is that it only needs to be implemented by 2019. And is that not an indication, as I was saying to Stephen Charles just a moment ago, that the bankers have ultimately won over the regulators?
Evening, Bronwyn. Short answer, absolutely. I mean, 2019, I don't know anyone who can say that 2019 isn't just a very, very, very long way away. The number was smaller, which was important, but the real deal was that time frame they've got. And what really sort of excited the banks and investors in banks, because they were worried about, A, having to raise that capital, but more than that, from a business perspective, from a banker perspective, you want to be able to use as much money as possible to generate profits, to lend out and the like, to gear it up, etc. And this basically gives them more capacity, more space for making profits. So the bankers are happy, investors and bankers are happy. Regulators, I would imagine, can't be overly thrilled.
Despite the bankers having, as we said, till 2019 to implement these new capital requirements, they are still bemoaning the fact that the new regulations have come into play, saying that it's going to impact, especially in emerging markets, their ability to lend to both consumers and to corporates. And obviously that's going to impact negatively on economic growth. That's the bankers' view again.
I suppose short answer is yes. Long answer, I'm not convinced. I mean, the two sides to the story, the one side, well, both sides are always going to say they got a complete and absolute raw deal. They're going to throw things out there like, oh, it's going to hurt GDP, and what about the poor people and everything else. I got to say, I think they're stretching it. We're certainly seeing lending happening. If anything, it's more a case of bad debts and issues locally, such as National Credit Act, and consumers just not wanting so much debt more than anything else. I think they're stretching it. Yeah, a bit of an impact, but I don't see that really being a real deal at all.
Quick comment on Sasol. Headline earnings per share for the company for the full year up 5%. The stock up 3 2/3%, as we've pointed out today, closing at 300 Rand. And Kolefole Mayele from Frost & Sullivan a moment ago saying that she believes that from a valuation perspective, Sasol is a little rich at the moment.
Yeah, I mean, earnings a little ahead of expectation. Really nice dividend, that well ahead of the market. You know, we liked it a heck of a lot at 270, at 300. Obviously, you've lost some of that shine there. Is it going to pull back? I think you'll probably pick it up in the 280s, and we would like it more in the 280s. But I suppose if you've got a longer time horizon than just 3 or 5 years, 300 is still a good price for Sasol. Still a good dividend at around 3.5% dividend yield.
Do we need to read anything into the fact that NTT is now extending their exclusive offer to Dimension Data to the 11th of October? They are, of course, you'll remember, offering $3.2 billion for the entire of Dimension Data.
We have to read a ton load into that. I mean, what are they hoping for? They needed to get 70%, or they need to get 50%, they wanted control. But if they got 70% of data, they could delist data and they could trade over the counter. If they got more than 90%, they could force those shareholders who were holding out to sell to them. They got 76% at the one level. That the sense was massively confusing, but they got 76. They desperately want 90. I don't think extending it to 11 October is going to make any difference there. Data will delist from the JSE and from the LSE, but there will be some shareholders who will still be able to trade it over the counter.
When you say we need to read something into this, you don't think that potentially the whole deal is in jeopardy?
I don't think the deal's in jeopardy. I just think that NTT didn't get what they were looking for. Obviously, if they'd got what they were looking for, which was the 90+%, on Friday they would have closed the deal. There would have been celebratory drinks all around. They didn't. The deal's going to go ahead, I'm pretty sure of that. It's just that they didn't get the percentage. They got the 70 threshold, important, but they really wanted that 90 threshold.
I don't know if you noticed South African Airways and that company out with results saying that full year profit rose 45% for the national carrier. Any thoughts on South African Airways? Have you had a chance to have a look at these results?
I skimmed the numbers. That top line number looked really, really impressive. You know, at the end of the day, there's always been such issues with hedging this and not hedging that and all sorts of stuff. And my immediate sense was we need to go back and really drill into sort of 3 years worth of numbers to get a really, really good picture. Certainly, if we look at what the period we're comparing versus the previous corresponding period, looking better, but oil price higher, rand a little bit stronger. That number, 45%. To me just seemed to be too big a number to be explained away without there being some sort of accounting underlying calls.
And just looking at the overall market, Simon, the market rallying in general led by the big banks globally, as we said, those Basel III requirements not as onerous as perhaps the market was initially anticipating. And secondly, we had that Chinese industrial output number over the weekend surprising to the upside. We've had such mixed data points to this point in the global economic picture. Do you think that we can now sigh some relief as we move to better things, and perhaps now we're not going to see such a mixed bag?
Bronwyn, I hope so. I really do hope so, but to be honest, I don't believe so. What we've been seeing with our market, particularly take the South African market, take the All Share Index, it's been trading below sort of from around the 26,000 and change to the 29,000 and change, and pretty much that's still what it's doing. Today we closed at 28,000 and about 600 or so. I think we got another couple of 500, maybe 1,000 points of upside to take us into those 29,000s. Then I think something will come out and worry the market. The recovery will falter. It remains fragile. We've said that all year, all of last year, and we're going to head back to the 26s. I'm not sure that what we need to break it either way, and my bias would be an upside break. That data we need to give us the break through 30 or through 26, I don't think we're seeing it. I think we're going to remain